Hi, good morning. This is Mayor Valensky with Driving Markets. Okay, sorry about yesterday. Didn't do a production yesterday, but we're going to do one now. Let's have a quick catch up where we're at, what was driving markets, what will be driving markets going forward. And remember, everything said in this piece is an opinion only. Okay, so quick recap. First Citizen Bank of Carolina bought the assets and the deposits of SVB, Silicon Valley Bank. That's already old news. It's out there, etc., etc. Remember, UBS bought out Credit Suisse. Signature Bank has been taken over by the regulator, and everything seems hunky-dory. So the markets have calmed down a little bit on the basis that it looks like the banking crisis has eased off. And as a result of easing off, the price of bonds dropped and the yield went up a little bit. However, now that the banking crisis appears to have eased off a little bit, the focus has now gone back to the Fed. So the Fed now, knowing that there's no banking crisis, could go back to its original statement in February, which was they're going to aggressively tackle inflation. Remember, just last week, the Fed said that they could ease off on rising interest rates because of the potential danger or crisis going on in the banking sector. However, it looks like that now is fading away, the crisis, which I don't believe it is. But according to the markets, Wall Street investors, traders, and analysts, looks like everything's hunky-dory and all under control. We'll come back to that in a second. So focusing now where the Fed is going to be putting its attention is likely going to be on inflation. Now, if you look at inflation economically, remember that it's not really gone down that much. With all of the pressure and all of the input applied to bring down inflation, it's not really been effective. Commodity prices have dropped, oil prices have dropped, which are main factors within an inflation measure, okay? Okay, so I got slightly disturbed there in my meeting. Okay, let's carry on. So the focus is going to be on inflation. With commodity prices dropping, you would expect inflation to have dropped also. However, it hasn't dropped, and that's going to cause concerns to the Fed and the central banks. As you saw last week, UK inflation jumped up to 10.4%, even though analysts are calling it down to 9.5% next month. It's still running high, and the likelihood is going to put more pressure on the central banks to focus on inflation, okay? Therefore, you're going to have rising rates going forward. Inflation is going to continue rising throughout 2023, as I've stated over and over again on this particular channel. Talking about Sam Bankman-Fried and FTX. Now, we all know he's had another 2 days ago, he had another $40 million charge put against him for fraud or bribery to Chinese officials to release some bitcoins within, or a sector of a lot of bitcoins, a lot of cryptocurrencies in China, and he was caught out on that. So it looks like it's all piling up for Sam Bankman-Fried of the bankrupt FTX. Not sure where that's going to go, but if he is found guilty, then he's going to spend several years behind bars in a state penitentiary in the US. Looking at a couple of other industry sectors, semiconductors yesterday did well, as did the banks also. Regional banks, secondary tier banks also jumped up. The dollar slightly weaker against the major currencies, slightly stronger against the yen. If interest rates do continue rising, then you can expect the dollar to rise further. Just talking a bit about Bitcoin, I've got a couple of minutes left, is that Bitcoin looks rock solid at 28,000. Jumped up yesterday nearly $1,500 at one stage, and it's at $28,500. Remember, I did say in the past, if it breaks through 25, then you will see it at 30 and then 35. Even though Binance has now been pulled up and been brought up on federal charges and brought before the federal court in Chicago, Binance is also under investigation. You would have thought that would rock the crypto industry, but it hasn't. It looks like there are the bulls and there's a real race after Bitcoin. Remember, Bitcoin is more or less a binary investment. It's either up or down. There's no fundamentals to it, but a lot of people are calling it at 100,000 and 250,000. Could go there, but I don't think it's going to replace the banking system. As regulators get more tied into and more focused on Bitcoin and cryptocurrencies, then that is going to make it a little bit nervous and very, very volatile. In fact, it's the volatility that makes it exciting. As regards equity markets, they're looking a bit toppy at this level. Looks like they're going to have a pullback of some sort. Remember, there's been a relief rally from the banking crisis that looks like it's blown over. I personally don't think it's blown over. I think there's going to be another 2 or 3 banks that are going to come to the forefront in the next 6 months, and they're going to shock the markets. Overall, we're in a bear market, so any rally is an opportunity to sell into it. This is Meir Velensky with Driving Markets. Have a good day.